Hey folks, welcome to Monday, the 28th of February 2022. And we have had a massive escalation in the Russian Ukrainian situation, the invasion of Ukraine by Russia. What has happened over the weekend has been an implementation of a ban from the SWIFT payment system on several Russian banks, not the national bank at this time, but several of these banks. And of course, that is causing massive volatility across the markets, and shock waves are certainly have been felt in every asset class this morning. Um, so really, what you're about to see on the charts is just a flurry of gaps, gap downs, gap ups everywhere on all these markets, which will be shown in yellow on the screen. We were live in the Discord last night and on YouTube briefly for the reopen at 2300 hours GMT. What you did see was, really the impact of two key things hit on the open last night and is still pervasive in these markets. Number one, the implementation of a ban on the SWIFT payment system on several Russian banks. These banks are now is expected to actually go to the wall. So this is pretty big stuff. This morning, the ruble is down another 23%. But the second thing that is a huge shock to the markets is Putin is readying and stepping up his nuclear armaments on the back of the implementation of these SWIFT payment system bans. And so that's obviously a massive escalation of the situation, and saber rattling at its highest level. So let's move over the charts here and have a little look, right? And so really want to focus on the dollar. So let's have a look on the Dixie. Well, we'll stay with the hour chart here, bottom right. Now, I hate having this much crud on my charts, but a lot of these areas are quite relevant markers for us to be trading. So the blue lines are generally support and resistance areas from my weekly bar charts. And so that's why they're on here. I'm going to actually take off a couple of these other areas here. There's a line in the sand down here. And this was resistance area, now turn support in the Dixie. But you can see really the gap up on trade. So the close of trade on Friday, now this huge gap up was about 1% up in the Dixie. We were down 1% in the euro dollar as a result of that on the reopen. So the gap remains on the Dixie. You do see gaps a little more frequently on the Dixie. Not that well, not recently, but obviously on this, we still have to work our way back down. 95 spot 54s to the downside, support 96 spot 99s just below here, call it 97s. And that target that we were looking at, 97 spot 42.65s, has been hit on the upside. So going back to that weekly level, there's your 97.74s as I was looking at last week on the pre-US, and we've hit that target now and just coming off a bit from that. But for me, we are going to be trading up at 100 spot fours, and it's just a matter of when. For me, I would say probably early summer at least, up here. There is, of course, this big old downtrend on the Dixie that we see here from the highs of the 2nd of January 2017 to the highs seen on the 16th of March 2020 over COVID risk here. And so, are we going to get up there? I don't know. I don't know about those prices above 100 spot 4. I don't know about that, but let's see. But certainly the targets we were looking at last week came into play. We've traded them, so nice work there, everybody. Oil as well. Now, with the banning from the SWIFT payment system, you do need to realize that Europe pays Russia via this system for a huge amount of their oil and gas, right? So, this is going to be a huge level one risk to the upside for oil. So if traders are no longer going to be looking to get their energy for Europe out of Russia, it's going to be putting that Ural grade of oil is on the Brent contract, right? So if people are kind of purchasing less Brent and more other products, i.e., WTI oil, well, that's this contract, that's CLE, WTI, North American Continental crude, and South American Continental crude as well. Um, that means we are going to be trading up here. 102 spot 72s, easy. 107 spot 25s, easy. All right. We're going to be trading higher here. Now, the thing to mark out that I was talking about last night on the reopen is we had this 7.5 or 6% gap up push here, right? On trade. And I'm just going to get rid of this green area for now, right? We had this push up here on trade. The important thing is to realize that when we have these big driving opens on Globex, for example, similar to when we had these Houthi attack on the Saudi production facilities, we had a gap up. The gap up to the gap was the close of trade on Friday to where we reopened on 2300 hours, and then we pushed to a high of 7.4% thereabouts. But on that Houthi attack, the gap here was 15%. Was 15%. On this yesterday, and this is helpful. Like this is only 3.5%, right? 3.5%. So a fifth of that, right? So the volatility, while it's good, it's not the biggest we've seen. Now the point is that the best trade on trades on opens like this is actually to be short, because we are so far away from average pricing up here that at some point it's just going to run out of steam and snap right back. And we did see that last night, coming through to the midnight marker and then onwards. And so quite technical. Back to the top of the gap here. 94 spot 99s, not 95s, whatever though. One tick differential, and then bid back up. So nice little trade to be done there. To be honest, it's about $1.50 up off of that. So really, nothing to be sneezed at. Where are we going to go for oil? Well, I would like to see this gap closed and then start talking about, we're going here or there. But for the moment, I think the bid remains into oil. I think there is. I haven't seen the spread between the front month and the back of the calendar at the moment, but the spread as of last week from J22, which is April 22 expiry, to the Z22, the December expiry, was a $12 spread. So that's a $12 of backwardation, or sorry, of backwardation. So we're high in the front, we're low in the back. All right, so that's what we saw there, and it's continuing. With that demand for product to be delivered now, rather than then, later, whatever your contract in the back is that you want to trade. All right, so look, talking a bit too much about oil here. We'll minimize this. A lot of these European equities, you see the gaps across the DAX stocks. They're not even really on the DAX. It hasn't really made a decent attempt yet on the bottom to close the bottom of the gap. So let's see if we can get there. I'm going to close down on the DAX now. We'll just minimize that. We'll minimize the Euro stocks, and you'll see the SPOOs now is quite handsomely trying to get back up and close this gap back towards the 43.68 half. So the gap open was at 42.99 half on the SPOOs. The Nasdaq, similar stuff happening here as well. We've seen reason to buy. Sell the rumor of invasion and buy the fact, right? And that's sort of what we're seeing again here, with selling the news of the escalation of risk to a nuclear level. Sorry, just letting some noise pass there. We have seen this. We're selling down on the news that there's a banning on the SWIFT payment system, and that is a fact. But the market then generally buying out of that dip right now. So I like the gap area to trade on the Nasdaq. It is standing down off of the 14.047 halves at the moment. The SPOOs in sympathy doing something similar right now. And the Dow not really catching much of a bid here this morning. But, it's the sleepy brother in this trio of markets, really. you know, not to say that it's not a decent market to trade at all. Nat gas, yeah, you know, nat gas is really trying to get back up into this former area, sort of 4.624s up to kind of 4.8. It's just having a really hard time at the moment. Fundamentally, you know, yeah, I want to be long nat gas, but you know, technically, I can't just give this, you know, a half a dollar risk, or you know, or even a even a 30 cent risk. Really, it's just too much risk. So you know, I think nat gas is going to have a massive up day, and I think you know we need to wait for that third order consequence of the bans coming on to onto onto trade with Russia, and then we can kind of look at doing something with nat gas. All right, so these are the broad strokes really of what's happening in these markets. Gold, just to finish off on gold now. Yeah, gold has really similar to oil, massive. Well, not huge, but a pretty decent bid up on the reopen, and then just taking it all back. So a lot of people will be getting long gold now today. A lot of retail traders and investors getting long gold, and at the moment, if they were buying last night, I mean, they're really licking their wounds right now this morning. So gap to close at 1892 spot one. Then we can kind of look at maybe getting long on gold. Also, some interesting articles out about the Russian National Bank getting back to buying gold. Um, you know, I think they said it was going to be a certain date, which is quite strange. I think it might be March 28th. I'm not sure about that. Uh, yeah, all right. So that's it. Go. Just to finish, actually, euro. Big gap here on the euro. I was buying this last night, got out around the pivot here, and quite happy I did. So a reversal down again to test on the gap. Well, we've already had it really at 7 a.m. So I think we can really start to make a meaningful close on this gap once we kind of get closer into the US session today. I just thought, you know, 1% gap down. I think it needs to. We need to average the pricing a bit better here on euro, so get a bit higher. All right, great. Um, that's it from me for today's session for pre-US. Please do hit the like and subscribe button, and get notified of when we're going live, as this situation is very fluid right now. So listen, have a good day. Only take the good trades, and take care out there. All right, bye bye.